Welcome to another Sharon Partners quarterly market update, and it is the end of the quarter, but it's also the end of the financial year. So, Steve, how's the year been?
Well, the financial year has actually been sensational, Billy. Australian market up 12.1%. Now, that's higher than the long-term average financial year returns. And the developed markets, or the global markets, they're up near 20% for the financial year. Again, way higher than what their average financial year return is. So, anyone in a balanced portfolio or a diversified portfolio of Australian and international shares, they've had a cracking financial year.
And what about more recently, the last 3 months?
Yeah, so when we look at the quarter, it's a slightly different story, Billy. So those great financial year returns, they come with a few bumps and potholes along the way, like every long-term return does. When you look at the chart here, we're showing the daily price increases of the ASX 200 and the S&P 500. And you can see it started off a bit wobbly, and then at the end of last year it came good, and things were going along pretty well until the end of March. You can see Australia there really flatlining. In fact, it's got a return of minus 1.1% for the quarter. Now, the US seems to ignore that and seems to be going up.
And how about other markets, Steve? What have we seen there?
Well, other markets are much more like Australia. In other words, they seem to be in a holding pattern at the moment. They're kind of not going anywhere. You can see in the chart here that most markets are either flat or a little bit negative for the quarter. Once again, really good financial year returns, but the quarter, everyone seems to be a bit cautious. And as always, Billy, this has got to do with, while inflation is coming down, it's coming down slowly. Interest rates around the world are taking a bite, so economies are slowing. And I think markets pretty much around the world are just a little bit cautious at the moment of how things are going to end up, with the exception of the US.
And speaking of the US, what's driving things there?
Yeah, so why don't we dig into the US a little bit? You know, it's not that the US market is doing so well. It's a couple of stocks. No, wait, it's one stock that's doing extraordinarily well. And you may have heard of NVIDIA. They make chips and software, all associated with artificial intelligence applications. Now, they're huge. The top three companies in the US, Microsoft, NVIDIA, and Apple, together they make up 20% of the market. So very concentrated. And NVIDIA itself, you can see in the chart here, it's up 190% for the year. When you look at the other, Apple and Microsoft, they're doing okay, which is sort of driving, you know, the overall NASDAQ index, but there's nothing to write home about. In other words, NVIDIA's leaving everything, you know, in its wake. Now, this is not necessarily a bubble, Billy, because while NVIDIA's price has gone up, its earnings are pretty good as well. So in general, that's a good sign. But I think, and you can see it just had a wobble in the last few days of June. I think the market might be thinking that we may have overhyped the benefits of AI a little bit. So we'll have to wait and see how that all plays out.
Well, thanks, Steve, for bringing the good news, a good financial year, a bit of a slower quarter, and as always, we will wait to see what happens next.